January pending home sales, negative, right? But it pushed it down to an all-time low. We actually did eclipse the 2020 little drop right there when we shut down the country. I mean, look at that. And again, I mean, what have we been doing for 2.5, almost 3 years? Nothing in pending home sales. But why is it important? Jobs. If you look at this, not only jobs, good paying jobs. So selected housing linked payroll employment, January 2026. Construction jobs, 8.3 million. Real estate and rental/leasing jobs, 2.44. Building materials, garden retail, 1.35. Furniture and all that fun stuff. And so when you look, that's 12.83 million jobs, but that's almost 8%. That's actually over 8% of total non-farm payrolls. This is why it is important to try to get this industry back, and especially when you got this. So if you look over the last year, there's been a total of 359,000 jobs created. Look at private education and health services, 773K, all of the sectors minus 400K. I mean, that is crazy. I mean, but that's where the jobs are at. And this would be way worse if they were actually allowed to go through with all those layoffs at the government level. Remember, courts were stepping in, unions, all this stuff, so they didn't even get to really do that, and they had to hire a bunch of people back. As far as I know, if you work for the government, let me know if they finally went ahead and annexed all those people. Institutional clients were the biggest net sellers last week. All right, and of course, institutions. I mean, this can be pension funds, insurance funds, union funds, all that fun stuff. Okay, and you're talking about 8.3 billion. So you can see retail, hedge funds right there. They're net buyers, not the institutions. And this is what came in at around 330. Huge put spike. So what is this? When I try to zoom in here for you, I'll try to zoom in the best I can. You can see a big one right there for 32 million, and one's for February 27th, one's February 23rd, one's February 20th, another one's February 27th. See, they all came in at 332, like almost the exact same time. And so these are big ones. Okay, 32 million, 23 million premium, 10 million, 8 million. All that fun stuff. Even Cheddar Flow came out right after I posted in Discord. Like, you just saw that 40 million SPY put print hit the tape. So they're praying. So, and looking at SPY real quick before we get into why. I mean, clearly we were just downtrending all day, and in the very last minute, the last 15 minutes a day, of course, they push it up, make it look better. Shockingly, what are we in here? We're in the same range, just in this range. That's what we're doing here. Can't seem to break out of it. Can't get all-time highs and set a new all-time high. 675 keeps kind of holding us up there. Again, 671 is below that. And on the Qs, real quick, make sure you mark this level out. 605 right there. That's where we rejected today around 11:18, I believe it was. And what this level here, is huge dark pool prints. About a $2 billion worth dark pool print. There's two of them combined together. And so if we can get up through that, then that's a good thing. But don't be surprised when you come up to it. If we reject, you know why. You know why we rejected, okay? Now, the data tomorrow, I'm just going to get to that early. When you're talking about advanced GDP, core PCE, personal income, personal spending, flash manufacturing PMI, flash services PMI, new home sales, and then, of course, the sentiment stuff coming out of Michigan. What else is going on? Well, there's always Iran. Trump just put out like 15 minutes before I record this. Warns of bad things if Iran doesn't make a deal. And so we got a lot of military over there right now with ships and everything else. So we'll see if that's going to spark off. If it does, clearly you're going to watch oil. All right, we talked about this yesterday. It's at a very key level, closed above that level today. But, like I showed you when they attacked them, it's going to spike oil. It would spike it up to definitely that trend line right there for sure. There's no doubt about that. But looking at this one, and of course the opposite will happen, right? If they don't, and Iran comes and they say, hey, we made a deal, whether they did or not, they say, hey, we made a deal, then oil is going to drop. And that's just the way it's going to be. But understand, if we break that trend line right there, that would be the third trend line we've broken in a very short amount of time. That is not good for the economy, just looking down the road, okay? Because what happens when oil goes up, we find out, especially if it really spikes and spikes and spikes for weeks on end, the gas prices are going to follow eventually. That's usually what happens. Plus, what does oil do? It goes into everything. If you watch Billy Bob Thornton's show, which I love, Landman, you get a great education on what everything it goes into. Okay, so let me know if you watch that show. I love that show. And then, of course, what else we have? Maybe finally we get the Supreme Court decision. It should be around 10 a.m. normally is when they make these decisions. We'll see if it happens. I hope. I don't care what they do. I just want them to do something. I don't care which way they go with it. Just get it off the plate so we can be done with it. And I mean, it's kind of interesting to see some of these reports come out saying they don't even think the market would move that much either way because, again, the administrator's already said if they strike them down, they have an alternative they're going to go to. So they think it'll be replaced with something else immediately. But would I expect stocks to move? Sure. What stocks can move? Well, what's been hit the most, really? Where do you got Tesla? I mean, Tesla's sitting in this kind of this flagging, had this false breakout right here, and now it's just sitting here wedging. That's a shocker, isn't it? Can't believe it. Which way is it going to go? Well, we're going to find out. And so, and some of these companies, I don't even know, I've totally lost count in which one of these companies or any of them, because a lot of them paid a lot of money to get exemptions. I don't know which one had exemptions and which one of them don't anymore. Amazon will be another one, right? That would definitely be another one for sure. So again, they bring the tariffs off, could see an initial spike. We don't know how the administration is going to respond. You look over Apple. I remember Tim Cook definitely donated a lot of money and pledged a lot of money for a build out or something to get an exemption at one point in time. I don't know if they still have that exemption or not, but Apple will be another one to pay close attention to. And then, of course, what else you got? You got Nike. Yeah, definitely Nike. Wrong one there. Nike, there we go, right there. Nike be another one. Again, this thing has just been a mess for so many investors, right? Lulu definitely be another one. That got crushed when the tariffs went in place. So anything that has a lot of exposure to China and all these other countries, absolutely. Okay, so just watch out for that. See what's in your portfolio. And again, I'll post if we actually get a decision. We'll see if they kick the can down the road. And you might notice, everything is pretty much red except for the VIX and IWM, right? Dow Jones Transportation, big move down. But it was risk on. Data centers, crypto stocks were up. You see right there, uranium was up. Oil was up, of course. International stocks up. Yes, we talked about this yesterday, how this was flagging out. It actually had some news today, projecting its earnings, things of that nature. It broke out of here even when the market was red. And I always say when the market's down, make sure you're paying attention to what's strong. The question is, can it hold if we get this pullback between 100, 102.50 really is what you're looking for. And so see if it can hold that. You can see it's above all those short-term moving averages on the weekly chart, on the daily chart. And so, if data centers get to ripping, like I said, it has to be risk on. Okay, because this one doesn't have any kind of crypto exposure. This is not like the other ones I showed you, Riot and all the rest of them, or Wolf or any of those. And so this one in CoreWeave are just straight up data centers and stuff. So shouldn't affect it at all, but it has to be a risk on deal here. CoreWeave was green as well, as you saw, and you can see the levels it'll start to move up to, but it just, I can't stress enough what I say, it has to be risk on. Okay. That was a news event that pushed it up. Again, CoreWeave was up a little bit, but nothing crazy. So, that's where we're at on all that stuff. So definitely buckle up for tomorrow. Let me know if you think the Supreme Court's going to go through. Let me know if we're going to do something with Iran, because you wouldn't expect anything tomorrow, but especially if something happens on the weekend, which is when you usually get that stuff, let me know what you think is going to happen and all that. And again, just buckle up for all the data. It's going to be a lot of data coming out. VIX is over 20, closed above 20. That's when you see more volatility. You saw it today. So watch out for that. The VIX.
Is there a near-term upside? I guess give us your overall forecast combined.
Yeah, a lot of times in midterm years, you actually get this favorable seasonality kind of going into early March. So I guess I tried to share my screen there. I'm not sure if you can see it, but
let me catch you.
A lot of times the market will form a low in February and then kind of bounce into March. And one of the things you can look at is we can look at the year to date. If we look at the year to date ROI of Bitcoin, I know it feels different. It feels different this midterm year to a lot of the other midterm years, but really we're tracking the average of prior midterm years pretty closely. And if you look at the standard deviation of those averages in 2014, 2018, and 2022, for basically the entire midterm year, Bitcoin has been tracking within one standard deviation of the average of prior midterm years. And what you'll notice is that kind of going into early March is where there's often a little bit of a bounce, but it's important to note that bounce usually resolves into a lower high. So yeah, it's hard to know exactly the way we're going to ultimately bottom out, but usually there's a 50% drop at the beginning of a bear market. Eventually there's a bounce to a lower high, and then we go lower kind of going into the summer months. So I think it roughly aligns with what you're talking about.
What are you if you had to pinpoint in this cycle move down the kind of the general low? And again, not to hold anyone to anything, and you don't have to give me a specific, but a range. Are we looking at it going back to 30 to 40,000, or are we thinking 50? Kind of where could this be?
Yeah, so I think it absolutely made sense to be really deterministically bearish late Q4 last year, because that's when normally Bitcoin tops out. The first 50%, it's easy. As the year goes on, I'm not going to be as bearish, especially once we get out to October timeframe. If you throw this chart up, though, it might give some idea. One of the things you'll notice, there's two things on this chart. There's the price of Bitcoin, and then there's the realized price and the balance price. And historically, if you look at all prior cycles, Bitcoin bottomed out after it went both below the realized price and the balance price. So here's 2011. You can see it went below both of them. And then you can look at 2014, right? It went below both of them. 2018, same thing. 2018 and 2020, right? Below both the balance price and the realized price. And then last cycle in 2022, we went down to the the balance price. So right now, the price of Bitcoin is just below 70K. It's 67. The realized price on Bitcoin right now is about 55K. Mm-hmm. So that seems kind of like a reasonable target that'll probably get hit going into the summer. And then more of the lower level of the realized price, the balance price, that's around 40K. But it's important to remember that these values are changing, right? They're not constant. And so you shouldn't marry one of these prices. We should recognize that, look, if we, at some point later this year, if Bitcoin is trading below these prices, that's usually a really good spot for it to think about turning around.
Interesting. So Scott, one thing to me, you have Bitcoin and it's only, it's compared to past bear markets, it's not that bad. But the sentiment, and it seems like the pain that people are feeling is so much worse. Am I wrong on that? Like, what are you getting out of this in terms of what's going on in crypto and in Bitcoin specifically?
I think that's a reflection of the natural human recency bias, because it was miserable in past bear markets. And every time we're in a bear market, everyone says, this is so much worse than last time, as if like FTX was somehow not worse than this, right? So I don't think it's worse. I think that sentiment is in the dumps because sentiment is in the dumps, and that's what you get when price is down. That said, if you actually look at any metrics tied to previous bear markets that are not technical, you have, fear and greed hitting lower points somehow for whatever weight we give that. Just to get 5 historic run of fear here that we haven't seen before. We are now getting the mainstream stories of Bitcoin going to zero. Not Bitcoin will go down further, but Bitcoin going to zero, the hyperbolic, it's all over stories that you love to see, at least near local bottoms. And you have Google searches for that exact thing at the highest since the peak of the last bear market, right? Bitcoin going to zero. So I think, once again, and Mike and I have gotten in trouble for these conversations before of conflating Bitcoin and crypto, which we obviously have differing views on. But I think that what you're really seeing is that there are Bitcoin people, and those are the Bitcoin maximalists who don't touch the others, who view it as a different asset. And then there's people who may be Bitcoin people but touch altcoins. And then there's people who are like knee deep in altcoins and meme coins and trading. And this is the worst it's ever been for those people, right? Because not only is it down bad, but it never got up in between. We didn't even see those bounces outside of, Zcash here and there or another asset. And so, listen, I still have been of the opinion since the day it happened, I've been pretty consistent that when Trump Coin launched, that was pretty much the end of the altcoin market for a very, very long time. You don't get a higher ceiling than President of the United States, most powerful man in the world, having a token, right? That's just the ceiling. No token's doing better than that, right? Take away even all the cynical views of what they should or should not have done. That's just a very firm ceiling to me. I said it that day, for better or for worse. Donald Trump now controls the crypto market. That was like a tweet that I said, and I stick by it. So I don't see many potential catalysts for those people who are super depressed holding altcoin 10 through infinity. But I do think that there's still quite a bit of hope for Bitcoin.
Yeah. And one thing, and Mike, I'm going to go to you in a second, but one thing that kind of struck me, and this is one of the reasons. So I base my entries on my swing trades, which is what Bitcoin is here, on technicals. But what kind of pushed me even more so is that I saw that for options, the amount of open interest on Bitcoin is at the $40,000 strike. Right. And what that tells me is that people are betting it's going to 40. And when I see the biggest amount of people betting that it's going there, it's telling me near term bounce in the crypto, in this case, in Bitcoin. All right, Mike, tell us what you got here.
Short that strike. And buy. So if I'm bearish, I'm structuring a put strategy. I'm going to maybe overweight a 1x2, or who knows, a 2x6, shorting that strike. Hope I get there, but make sure I got plenty of puts with higher strikes in front of it. It's just a classic strategy. But I want to show you 2 charts why I think this is different this time. That we should stop looking for dips in Bitcoin to buy. We should be looking for rallies to sell. Now we all know 64,060 was pretty solid support. But I want to show you some things you haven't seen. This is just a chart of the Bloomberg Galaxy Crypto Index. It's 35% Bitcoin, 35% Ethereum. It's the broad market, but it's broken down below a key pivot that's held. That was the lows from 22, 21, lows from 25. It's broken down below. It's hovering below. This is a bear flag pattern. At the same time, we have stock market volatility. This is S&P 120-day volatility buried. But I want to show you one other chart that tilts my macro theme for the whole space to go roll over. This is a Bitcoin 200-day moving average. It's rolled over. It's finally below 100. Maybe we get near any type of bounce near that you sell it. Overlaid with the 200-day moving average of the S&P 500 index. Remember, that's the same chart syndrome. My base case is that's going to roll over, and there's just one bottom line factor, right? You don't ever want to buy risk assets. I think now Bitcoin and crypto is among the riskiest. They're leading the way. Just look at that 180-day volatility in the Nasdaq. It's buried, and it's a good lesson when it gets that low. I mean, it's at almost a 8-year low. You just wait for opportunities. This is nowhere near where it started. So the way I see it is, what's the sentiment so negative in this space? Because people realize everything we talked about 5 years ago or more is gone. Look forward to it. ETFs have been launched. The government pivoted. We've had the halving. We've had record-setting stock market, and now we see cryptos, mostly Bitcoin, is no longer digital gold. It's failed there. It's failed as leverage beta. And to me, this is a liquidation market until we purge some of the excesses. All those altcoins that are tracking nothing worth zero. To me, that's the trend. But the bottom line is, when or if the stock market can avoid rolling over, amen. Maybe it can pull cryptos back up. But see what's changed? Cryptos used to pull the stock market up. Now I think the risk is volatility picks up in stocks, following what's happening in cryptos and precious metals, and the whole thing starts tumbling, which is why my buys. Still bonds.
I think one thing that is really interesting, and why I think a lot of the crypto crowd is feeling, we talked about the altcoin aspect of really hurting crypto, but the bearishness and the feeling, this fear index, fear and greed, I would guess it has a lot to do with the fact that every other asset is performing amazingly well comparatively. And so we're not used to that in crypto, right? Usually Bitcoin is at all-time highs when the stock market's at all-time highs. And we've seen this divergence, and that makes it even more painful when you're in Bitcoin and you're watching the stock market keep going up, but Bitcoin is kind of lagging here down 50%, right? You really feel like you missed the boat in that way. But I guess the question now is, as we turn away from crypto, is there, I mean, number one, Mike, I know you've had a very active week, right? But, is the stock market about to roll over as well? Like, are we on the verge of the stock market catching up to Bitcoin? Because historically, that's what's happened, right? Bitcoin tops out first, then eventually the stock market rolls over as a higher risk, and then lower risk asset.
So I was just on a call with a bunch of really astute leveraged money traders, commodity traders in Geneva this morning, and they all get it. The key thing they're watching on the side of their value at risk models is the U.S. stock market. Everybody gets it. You can't just buy it here. You got to wait for a dip, how far it goes. If it breaks out higher, okay, fine. If it drops that 10% finally, then you look for that first, oh my gosh, healthy correction. But we all know that's the animal. That's the 10 in the room of what's the next big trade. And so that's why I look at what are the indicators. That's why I just completely stay away, look for opportunities. But I want to show you two key charts as we walk into this long weekend, and that is I'm making the call that gold is done. It's just too high. I'm, been early in that trade, but been bullish forever. And one reason is I just show you at 75 barrels of WTI per 1 ounce of gold, we are just so stretched. This goes back. This is when WTI went negative in 2020. It just, you don't want to be buying gold at this most expensive level versus the most significant industrial commodity almost in history. This is a 100-year chart. The mean is around 20.
Is different.
Exactly. So that's my point. This is what I think was going to happen. So I can't predict, obviously, what's going to happen in the Middle East. Whatever it is, whatever the U.S. does, if it's a swift, the goal is going to be a swift response and swift action. And the bottom line is, I think at most risk is definitely crude oil is very likely to be putting highs for the year. I just don't know where that's going to be, because we all know it's a bear market. I can show you one chart in that real quick to just point out it's a bear market bumping up the other range and the range. But to me, the most susceptible commodity is if we get some more détente in the world, is gold just dropping back to 4,000 because it's so expensive. It's the highest ever versus the commodity index. It's the highest, almost the highest ever versus crude oil. It's the highest in versus its 60-month moving average versus 1980. So my point is, if you're not on top of that trade, it might be actually getting close to the point to be looking for prudent shorts. And that's fair to say that in the store of value, but certainly, I mean, I've been saying that in silver, and he moves near 100. But to me, that's what's going to be happening. Is here's the key thing: is even if the stock market drops 10%, let's say we get a 10% drawdown, stuff that used to happen. To me, that's going to hit stops on everything, even gold. The gold might pump up initially, even crude. I mean, Bitcoin might bounce initially, but that beta force is what everybody's got to be watching, and I'm afraid it's just a matter of time. And particularly when you look at this is Nasdaq volatility. It's buried. You just don't want to be long risk assets or short volatility there.
Well, can I ask a question or comment? Because listen, generally you have, the dollar index goes one way, everything else that's risk sort of goes the other way. And we've obviously seen all correlations that we expected disappear, right? Stock market's gone up, gold gone up, silver's gone up. Those things aren't supposed to happen. But if we return to some semblance of normalcy, Mike, wouldn't your belief that gold is going to drop massively to 4,000 mean in a normal world that stocks are going up?
It could, but that's the point, Scott. They've gone up so far, and volatility is at an 8-year low. That's my point. Is part of my quote last year. I thought they'll sell everything. That's only been panning out in cryptos. Is we just reached levels where risk assets are so expensive. This is just waiting for a trigger for reversion, and that's the key thing also about gold is you can easily pop down to 4,000. It's still been a great overbought extended rally forever. It's just the bottom line is when you get this stretch with any risk assets, you don't buy. Now Bitcoiners learned that lesson the hard way last year, and particularly when it's the pile-on factor. We all know the selling when you're yelling factor. It's easier said than done, but it's working out that way, and that's why I see gold and precious metals by this time next year. We're going to look back and say, yeah, we were supposed to take profits when the market told us to.
So if we're looking at a market, and Ben, I'm curious your input here on looking at risk assets going down. Let's say stock market comes down, and I'm not sure if that's your view, but I would guess it generally is what's the catalyst? Is it an economy that is starting to head towards recession? Because we did get the jobs data out, which was lukewarm. The JOLTS data was a little bit light, showing less job openings. The Challenger layoffs was the highest in January it's been since 2009. But then today we got Philly Fed manufacturing, which was slightly stronger. And so we're getting this cross current of data. But a lot of people out there watching are going to say, okay, well, if you say the market's going down 10% or 20 or whatever, well, what is the trigger for that, right? And I was just curious what you guys think. And Ben, if you have a viewpoint here.
Yeah, I actually think there's, if you look at the S&P divided by gold, there's a very similar story that you can tell here as to what you saw happen with altcoins against Bitcoin over the last few years. So basically, since 2021, liquidity has been pretty tight. So we have this like liquidity risk model here where it's been really tight for a long time. And that doesn't mean you can't have bull markets. It just means those bull markets are characterized by really narrow leadership. So in crypto, that was characterized by Bitcoin going up. And then when the Bitcoin bull market was over, it exposed the underlying weakness in the altcoin market because